The U.S. apartment market is in the best shape it's been in a decade, but not every market across the country is riding that wave, and a lot of them are in the desert region of the country, and Tucson is one of them. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Tucson update. Tucson ranks among the nation's weakest by a lot of key metrics, including overall occupancy, annual rent change, concession usage, and average monthly rental rates. But before we beat you down a lot of bad news that you might already know about if you operate or own in the Tucson area, we're going to focus on some good news first, highlight the good things, then we'll circle back and give you the big picture bad news. But first, the good stuff. Let's look at occupancy by age category, and you can see that occupancy in properties built since 1990 is in much better shape than units built prior to 1990. Occupancy in the 1990 plus segment at 94.4% compared to a rate of just 92.3% in that pre-1990 category, and that's a premium of 210 basis points, so there's a strong preference for newer apartments even though they cost, on average, about $270 more per month. However, most of Tucson's apartment base was built in the 1980s and the 1970s. Fewer than 10,000 units built since 1990, just not enough economic growth here over the past couple decades to justify much development. And so it's those older units that are pulling down overall fundamentals in the Tucson apartment market. But before we get to those overall numbers, again, a couple more good things for you. We're going to highlight a couple submarkets that are outperforming the metro norms, and they are higher end, higher price submarkets. In fact, the metro's two most expensive submarkets. Let's start first with North Central Tucson, Oro Valley, occupancy at 95.1%. This one continues to do well, having maintained occupancy in the 94-95% range, as you can see, for the past 2 years or so, recovering far faster than any other submarket in the metro. But no longer seeing much rent growth here, rents up just 1.3% year over year. Another submarket for you, Central Tucson University, occupancy not quite as strong, 93.7%, but that is the second best in the metro, and it's up a substantial 310 basis points year over year, and rents also climbing up a metro best 4.3% over the past year. So that wraps off the relatively good news. So let's rip off the Band-Aid and give you the overall numbers, which don't look so good. Occupancy, moving in the right direction, but still weak, just 92.7%. And of the nation's core 100 markets, Tucson is one of just 16 with an occupancy rate under 93%. Next door, Phoenix is one of them as well, right on par with Tucson at 92.7%. And year-over-year rent change, Tucson put up the 6th worst number in the country, 1.2% year-over-year rent growth. Only Las Vegas, Long Island, Reno, Rochester, and Mobile did worse. Phoenix, by the way, wasn't much better. Rents up just 1.7%. And it's hard to push rents much when you're discounting heavily. Of the top 100 markets, Tucson ranked second behind only Las Vegas for concession usage, with 44% of units offering discounts as of first quarter 2012. We don't expect to see the story change much in the year ahead. Tucson's economy is improving at just a very slow pace, and at the same time, there's an active shadow market of single-family home rentals that's competing for a small number of renters. And so with those two things combined, we expect to see apartment fundamentals continue to improve at a very minimal pace for the year ahead. And that wraps up for Tucson. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.